Welcome to Markets Now. I'm Michelle Rook along with Scott Varilek with Kooima Varilek. We are seeing higher prices in everything but cattle futures this morning. And Scott, let's start off with grains. A wicked sell-off yesterday after the WASDE report, but looks like we kind of got overdone.
Yeah, a little bit of correction from that. Thanks for having me, by the way. And the bean number was the number that the ending stock number caught everybody a little off guard. We just got done with an acreage report that said we're well short on acres on soybeans. So I don't know that anybody anticipated we'd have a much larger than expected ending stock number. So it caught the markets off guard. I don't know that it had to be as negative as it was, but that's probably due for the recovery today, but quite a choppy action here in the mid growing season, wondering what to do. And it's been, take your stance. Do you think the crop's in good shape or not? So rather than hanging your hat on some of these USDA numbers, I think the weather has still been the main factor there, to try to get us some direction. And then up until the last few days, maybe there's a little demand news to kind of throw in there and sprinkle into the mix.
Yeah, no doubt. And you've got to believe any pullbacks here, at least on soybeans, are going to be easily bought. Let's talk about this cattle market, though. You had grain sharply lower yesterday, but we ended lower in both live and feeder cattle futures, live cattle after making new contract highs. Was that a blow off top yesterday?
Every time we put in a little bit of a high, that's always what's talked about. Blow off top. I think we've had a blow off top in April and June, and now we can throw July in there too. Another blow off top. So that's what we're going to talk about when we're at record highs. And yes, that risk is there. So we had a big break in the corn futures. The feeders loved that news and got themselves up $4 on the day, and live cattle were following. And the cash bids were okay. We already had some steady bids in some areas, so I think everybody felt good. And anybody that was short, taking a chance to try to be short, it pushed them pretty hard. So there was some blowing that did happen at the top, only to be found by, okay, now we start heading lower as the nerves are high. So large daily trading ranges, and that's just something we have to get used to when we're at record highs. So once the dust settles, you have to look around and say, okay, what are the real facts here? So we're July 13. We think that demand usually gets a little bit softer in August, but we've got a record choice select Hogs choice select boxed spread, $29 right here in the beginning of July. This is when the demand is supposed to be really slowing down, but we're still having a nice shot in the arm for quality beef. I think the consumers still want it. You can about find what you want to hear on the demand side on who's featuring what, but I'm led to believe that we're still seeing some very good beef demand. And that's why packers are really looking for cattle. When you get some cattle on the show list, they're going to show up and start looking at them very quick. So feed yards are very current. I still think there's a lot of leverage there if we want to use it.
But we haven't heard of much cash trade this week. We were slightly higher in the weighted average last week. Do you think we can be steady to better again?
Yeah, we have to shake off yesterday first, because early in the week there was already steady bids. Some 290s in the meat, and that would have racked up the meat trade as far as what I saw last week. And there was some of the similar steady 184 bids from some regionals in the north. Did hear of a few dollars lower bid in the south. I'm sure the Packers going to try to take advantage of yesterday's break, but just a day and a half ago, you wouldn't have thought, okay, cash is fully steady, and now we're waiting for higher, because there was a lot of passing of those bids. But you get some shakeups in the futures. Maybe it'll be easier for guys to sell now, but we're current. I don't know if guys are going to trip over themselves and worry about it. They'll be willing to wait another week, but the reason we're current is because there's such big profits in some of those cattle, the triple digit gains and big winners. Guys are willing to sell and take some of that money home, and that's what's keeping us really current, I think.
Okay. Yeah, I just wondered if the break in the futures would maybe break the cash here this week or not. All right. Hog market. We also had a bit of a reversal there yesterday. I don't know if it was in sympathy with cattle or not, but we're back up here today, and really demand and the cash market have kind of come together to keep pushing that market higher, right?
Yeah, front months are acting strong. I think we've made it into July, and things are trading okay. So we can add the China trade rumors and the weaker dollar to some of these markets, any market that they look at, because our dollar is weaker and this global currency risk that's possibly the reason that's breaking our dollar. That's what keeps these front month hogs up, saying, okay, maybe China's going to be a little bit interested here. They're very important to the hog market. So that's our front end story, but we do have a lot of cheap ice weans, and the supply availability is happening. So over the last 6 weeks, you've been able to find what you want and cheap. So looking to that December to February to April timeframe, there's going to be plenty of hogs available. So not saying that the deferreds probably have much life left in them here for a while, as we're going to see that supply coming, but it could be in the front, but it is a futures market. I think that this larger supply is going to win out, and we're going to break probably sooner than we probably should.
Even the front months, though, we have to take out last week's highs after we put that reversal in, don't we?
Yeah, and I think when we get over $1 here, I think this is getting to a high enough level. And yeah, we got a 103.70 on the July. That's as high as we got, and we're going to quickly move on to August at 95.55. There's usually a discount there for a reason. That's always that obvious trade. How can August be so discount to July? It's going to take its time before it's going to close any kind of a gap on where the July is going off. So I think that discount is there for a reason. Maybe it gets a couple dollars of it back, but it's probably going to have a tough time getting any higher than that.
Okay. Appreciate your time. Thanks so much for joining us. Scott Varilek with Kooima Varilek, and that's Markets Now.